living, or running a business in Quebec. Here's a truth you can't ignore. GST and QST are more than just lines on your receipt. They can make or break your business finances. Miss the details, and you could face audits, penalties, and a massive headache. Today we're breaking down the difference between GST, the goods and services tax, and QST, the Quebec sales tax. No jargon, no textbook definitions, just the clear, real-world facts you need to keep your wallet and your business safe. Let's start with GST. GST stands for Goods and Services Tax. It's a federal tax, which means it applies across all of Canada at a rate of 5%, set by the federal government. When you buy most goods or services, whether it's a new laptop, professional services, or even your morning coffee, GST is added to the price. If you buy something for $100, GST adds $5, making the total $105. Businesses that are GST registered collect this tax from customers and send it to the Canada Revenue Agency, also known as the CRA. They're essentially tax middlemen, collecting on behalf of the federal government. If you run a business and make more than $30,000 in taxable sales in a single calendar quarter, or over 4 consecutive quarters, you must register for GST. Even if you make less, you can register voluntarily to claim input tax credits, meaning you can recover the GST you paid on business expenses. Now let's talk QST. QST stands for Quebec Sales Tax, and it's provincial, unique to Quebec, and managed by Revenu Québec. The current QST rate is 9.975%, and it's calculated on the selling price excluding GST, no compounding. Using that same $100 purchase, GST adds $5, QST adds $9.98, so total taxes are $14.98, making the final bill $114.98. Here's a quick tip. In Quebec, you can quickly figure out the total with taxes by multiplying the price by 1.14975. That's 1 plus 0.05 plus 0.09975. And here's something important. Not everything gets taxed. Some goods and services, like basic groceries, prescription drugs, and certain financial services, are zero-rated or exempt, meaning no GST and no QST apply. So, GST versus QST, what's the real difference? Jurisdiction. GST is federal, managed by the CRA. QST is provincial, managed by Revenu Québec. Rates. GST is 5%. QST is 9.975%. Application. Both are calculated on the base sale price. Registration. Both require registration at $30,000 in sales, but with separate accounts, one with CRA, one with Revenu Québec. For Quebec businesses, this means double the responsibility: collecting, tracking, filing, and paying both taxes on time. Why does this matter so much? Because collecting and remitting sales taxes isn't just a legal requirement, it's an ethical responsibility. These taxes fund healthcare, roads, education, and public services we all rely on. Failing to collect or remit properly can mean costly penalties, audits, and a loss of trust with your clients and the government. In business, your reputation is as valuable as your profits, and good tax practices protect both. Keep accurate records, separate the taxes you collect from your operating cash, and set calendar reminders for filing deadlines. It's not just compliance, it's good business. If you found this breakdown helpful, hit that subscribe button and turn on notifications. At ClearBooks Academy, we make tax and bookkeeping topics simple, clear, and, believe it or not, even a little enjoyable. Stay smart, stay compliant, and keep your business on the right side of both the CRA and Revenu Québec.